Welcome, and thank you for joining us for today's webinar, Improve Compliance and Controls with Invoice Approval Workflow Automation, brought to you by the AP and P2P Network and sponsored by Zycus. We have a few housekeeping notes to go over before we get started. If you have any technical questions or issues using the WebEx platform, please use the chat box and we will respond right away. If you have any issues with the audio, you can click on the phone icon above the chat window to receive teleconference information. For those that do need to call in, to ensure call quality, everyone's lines have been muted today. If you happen to get disconnected, you can log on again using the instructions provided in your confirmation email. But if you continue to experience difficulty, please email webinars@iosm.com and we will respond right away. We encourage you to ask questions throughout the presentation. Please type your questions into the chat box and hit send to submit them. And at the end of the presentation, we will have our presenters answer questions. If we're not able to get to all questions, we will respond post-webinar via email. This webinar will be recorded, and you'll receive a thank you email with the on-demand materials within 2 business days. Our first speaker today is Chris Doxey. As president of Doxey Inc. and as a management consultant, Chris Doxey works with her clients to implement internal controls and global best practices, leveraging her experience at Digital Equipment Corporation, Compaq Computer Corporation, Hewlett-Packard, and MCI, where she held senior finance and accounting positions. This extensive experience allowed her to implement global compliance requirements and standards of internal control for the procure-to-pay process, order-to-cash, financial operations, and logistics. We also have Asta Trivedi. Asta is a product marketing specialist who spearheads Zycus e-invoicing. She drives strategic initiatives like formulating growth strategies, developing the right product positioning, market development, and thought leadership in the area of invoice processing and AP automation digital initiatives. Over a career span of 6 years, Asta has worked closely with both the product and customer aspects of numerous B2B organizations like Tata Steel and Login Radius. Building a technological solution to automate and optimize Tata Steel's finance and supply chain has helped her understand the challenges in the area closely and evaluate possible solutions for various business cases to make finance and supply chain processes more efficient. Expertise in such varied fields has given her a holistic grasp of procurement, invoicing, and technological adoption in same. And at this time, I would like to welcome both of our speakers and pass the presentation off to Chris.
All right. Thank you very much. Welcome, everyone. We're going to have a very interesting webinar today. And we're going to start with setting the stage a little bit, talking about the components of the AP process and, of course, some of the key pain points that we're going to be addressing today and providing solutions for. And we're going to talk about the impact to your company and focus on the 3 critical corporate controls and how the automation of the approval process with workflow can really help address those pain points and really help implement these 3 critical controls. We're going to talk about actually an example of a corporate approval policy process and how it actually works and how to link the invoice process with workflow automation, provide a roadmap for implementation, and provide you with a case study and really give you some examples of that last mile to workflow automation and the role of technology. We sometimes forget about that last final mile with workflow automation, and we're going to focus on that a bit today. We'll look at the drawbacks of approval and workflows with ERP and the generic workflow tools, and we're going to address that today and, again, provide you with some good examples and solutions. and actually address the need for a specialized solution and provide you with the characteristics of a best-in-class workflow management solution. So again, a lot of content to cover, and as suggested, please provide your questions as we go through the webinar today. So as we set the stage, we have several components of the accounts payable process, really starting with the supplier master, invoice processing, disbursements, research and reporting, account reconciliation, internal controls, and customer service. And we know that some of the pain points within the accounts payable process are due to locating missing or misplaced documents and paper if we don't have an e-invoicing process, keying in information to find documents in the system, and then actually contacting procurement and receiving to correct the exceptions. And we know that if we talk to some of the controllers, that accounts payable is going to find many pain points and really be looked upon as the most labor-intensive department within finance. And that's going to get most attention if we look at what controllers and finance executives have to say. And a lot of this, of course, is coming from an IOFM survey from 2016. And some of the pain points and issues that accounts payable professionals face, they're spending about 84% of their time by a list of manual transactions. And again, coming from a 2017 survey, not to go through every single one here, but we're spending time setting up suppliers, gathering payment information, setting up payment issues, tracking down purchases, batching the invoices with purchase orders, and keying in information and searching for any missing information, as well as reconciliation and responding to supplier inquiries. And there are, again, many, many pain points as we looked at on the last slide, but some of the 5 top pain points, and I tend to keep up a list of all of them when I talk to my clients. So the 5 key ones that I've gathered over the years, when we talk to some of the folks at conferences and some of my clients, one of the top ones is we need a way to monitor and report how many invoices have been received and awaiting for payment, and how can we determine where the invoice is in the overall approval process. Number 3, we need a way to take advantage of supplier discounts. Well, again, how can you take advantage of a discount if you don't know where the invoice is? And how can I get individuals to review and approve invoices much faster? And one of the last pain points, again, it will help to address today is how do I know where to send the invoice to for approvals? And, again, if you have to route the invoice for approvals up the food chain, how do you know how to route the invoices if you don't have an automated workflow process? And, again, that's one of our key topics. And what's the impact to our company? And we'll really kind of set in with our 3 critical corporate controls. And really to set the stage with segregation of duties and delegation of authority, we know that these are the 3 controls that really set the stage for our overall company. And segregation of duties is really one of the top controls that helps to prevent fraud if this control is totally operationalized into the foundation of a company's DNA. And really that helps to drive the system access controls, and delegation of authority, of course, is the approval controls that we'll be talking about as one of our main themes today. And we know that segregation of duties is really one of the most critical controls that any company can have. And it helps to reduce the likelihood that any errors, either intentional or unintentional, will remain undetected. And it's really kind of a check and balance. And we're looking at, of course, preventing fraud and helping to detect an error, and of course, to detect and prevent a fraud is really, one of the key things that we focus on, but also to reduce the cost of correcting an error and really to mitigate the error and to help reduce the cost of any duplicate payment or any erroneous payment, of course, and catching an error upstream and, looking at our components of the accounts payable process. Doing things correctly the first time is really going to help prevent any fraud or errors or any accounting issues, even in the fiscal closing process. And also, we're going to help protect the organization's integrity and, of course, really focus on quality. And that's enhanced through a system of checks and balances, which is what segregation of duties is all about. So what's the best practice for this? And one of the best practices, of course, for segregation of duties is to have good controls around segregation of duties and, of course, a system of internal controls. And this can be actually established by a quarterly process or a self-assessment process or controlled self-assessment process that can be built right into your internal control system. With system access, with everything really being automated within all those components of the accounts payable process that we looked at, the integration of segregation of duties into system access is very critical. And reviewing system access rights on a periodic basis, usually monthly or quarterly, and it depends on your tolerance for risk. And this is really to ensure that system access capabilities are appropriate for your current staff members and should reflect any changes in responsibilities or movements to other departments. And basically, if there has been a fraud or any significant movement or any implementation of a new system or process, it's a good idea to review system access rights as well as any segregation of duties controls. Because when things change, that's when controls for system access as well as SOD or segregation of duties should be updated. Now, kind of our star of the show today is delegation of authority. And really, the purpose of delegation of authority, and we often call it DOA, is to ensure that the efficient operation of the company is in place. And it's really to focus on maintaining fiscal integrity and adherence to policy. And one of the case studies that we'll talk about kind of takes us on a little journey of how delegation of authority policies were written to correct a very broken company. And if you recall, the poster children for the Sarbanes-Oxley Act of 2002 were WorldCom, Enron, Health South, Adelphia, and a few others. And with delegation of authority, we're focused on accountability for the overall management of property assets, the financial and human resources of the overall company. And, of course, that rests with the CEO and, of course, the CFO. And we're looking for proper governance of the delegation of authority, which is usually the responsibility of the controller. And what we're going to actually show you is building the proper policy for delegation of authority, building that right into your workflow is going to help establish the proper signature authority, and actually building that to workflow is going to help with certainly the automation and making things a lot easier for accounts payable. So what's the best practice here? And, again, we gave you some best practices for these three critical corporate controls. Many companies are assigning levels of authority to actual job grades or levels within the organization. And what they're doing is they're applying workflow to help streamline the overall approval process. And what happens is if an individual within the company moves to another department, either vertically or laterally, their level of authority is automatically updated in the employee master file. And actually tying your approval levels to job grades is best practices that's been done by many Fortune 50 companies, and it's a lot easier than trying to take an approval table that I'll actually show you as an example and try to match that to workflow. And if you can automate right from the beginning, it's really going to work a lot better. I remember doing delegation of authority actually manually and, with signature cards, and it was just nearly impossible to do, certainly from an accounts payable perspective. And, we often get the question, well, gee, what happens when someone, goes out of the office on vacation or, is out, on leave or something like that? Well, linking that to, certainly the employee master file and establishing, the next level down or, the person that's responsible on a, lateral basis, it works the same way. But just, putting a trigger in and putting the a form in, an E-form in, I should say, to make that work, it works a lot better than, chasing down manual forms and getting people to sign and delaying, getting those invoices approved. Okay, so what's an example? So the delegation of authority is really to, ensure, as we mentioned, the efficient operation of the company and overall accountability. So what we're really saying is that we're focusing on accountability, safeguarding company resources with the proper internal controls. And persons with assigned authority under the terms of the delegation of authority should safeguard company resources by establishing and maintaining controls that deter and detect any potential misuse of resources. And actually, if you have a good, strong delegation of authority policy, within your company, that's really kind of the starting point, of course, for the overall, workflow that we're going to be showing you a nice flow chart about. And I remember, writing this policy. I was actually an employee of WorldCom that became MCI after the fraud, and this was what we did as part of the cleanup, if you will, efforts. And we have a case study that we'll talk about to show you how that actually worked. So one of the first questions we got asked, by many of the executives, well, gee, can I just go ahead and delegate my authority right to, my admin assistant or the next level down? And we had some very strong statements in the policy that said, well, if you do that, you're still responsible for whoever you delegate your authority to. So how does the process work? And what you do is you really kind of start at the top with the board of directors. What do they have authority for? And, again, the levels here are going to depend on the size of your company. So we said, okay, the board of directors will approve, $50 million, chief executive officer, CEO, between $5 million and $50 million. And then it gets a little complicated, underneath the CEO because you've got business units. We had operations and technology and IT, we have finance, and then we had HR, strategy, and others, and, of course, legal and staff. And we came up with a concept of what we call the double key for segregation in complex workflow situations. And the double key is really making sure that there's finance approval and, CFO and CEO approval for certain types of expenditures. And, of course, the double key needed to be in place for finance and operations. And what this really meant is that not that we didn't trust operations, but we wanted to ensure that finance was really adhering to their fiscal duties and doing the proper ROI and making sure that particularly for capital expenditures that the proper ROI, again, and financial analysis had been done. And again, this was in place to correct, again, a very broken company. But it worked very well because, again, the company was able to get out of bankruptcy, number one, and also pass all the requirements for Sarbanes-Oxley 404. But, again, it had a lot of, layers and levels underneath this that I'll show you as well. And the matrix, is basically the next step, and this is a summary delegation of authority policy matrix. And what you would decide is across the top, who has what levels, and whether it's approval, or whether they need to just review or approve. And we came up with levels as far as spending, acquisitions, mergers, divestitures, joint ventures, and honestly, there wasn't very much of that going on anymore. After the bankruptcy and the new company, was established, and there was, however, an awful lot of legal settlements, and that was the requirement that needed to have, of course, legal, CFO, controller, corporate finance. And then there was consulting and contractor agreements, because we did bring in a lot of third parties to help us, get in better shape. So it was, very important to build this matrix. And this is what was in place for the establishment of the linkages to the job level. So getting kind of a step-by-step process that will show you, getting that kind of overall top-level process flow, figuring out kind of what we called cut points for who signed off at the top, the next level down, and then between the business unit level, and then we built the matrix. And then what we looked at doing was, okay, how do we link the approval level to the overall workflow automation level? So looking at automated workflow approvals, this is really the first step in reducing the invoice process turnaround time. And what we're going to really see, of course, is not only helping to enhance controls, but we're going to look at reducing time and actually helping to reduce costs. And we're looking at helping to stop all that photocopying and reducing the great paper chase, but it ensures the visibility of real-time liability. And you're not, chasing the accruals at the end of the month, trying to figure out, okay, am I going to have to do any, last-minute adjustments to our accruals, and, make sure the fiscal close is correct. And we're actually going to have, real-time and more effective cash flow monitoring. And what, we mentioned earlier is one of the pain points and one of the issues that accounts payable faces with the manual processes is it can't take discounts. And this is going to help us, get payments in a lot faster, because we know where our invoices are, and we're going to be able to take early payment discounts. So what we're doing in this chart is we're taking, those components of AP with supply master, invoice processing, disbursements, research, reporting, account reconciliation, internal controls, customer service, and we're able to see that we're able to impact the financial close. And the financial close really consists of close and consolidation, and of course the final mile, which is financial reporting. And this is a way of kind of tying all the pieces together. So with an automated workflow process, the invoice process is linked to, again, the DOA policy, Delegation of Authority policy, and it can be completely automated based on defined rules, basically taking that matrix that we looked at and tying that right to your workflow. And the workflow determines if an invoice needs approval, who the approvals are, and what order they should be approved based on payment of the invoice. And the workflow then sequentially asks each approver in the approval list to approve invoices online. So it goes up kind of the chain of command, based on what I showed you on the last couple of slides. And you can also define a rule, so invoices over a certain amount, say $100,000, or a specific amount designated in your policy may require CFO approval and then CEO approval. And then, basically what you can do by building rules and your workflow process is you can actually flag those to be kind of rerouted in a different direction. And what we were doing, you know, again, in building this process, and you know, also a really good, you know, suggestion is that you can actually, you know, build certain workflow routing for specific suppliers. And it could be suppliers that kind of are on a watch list, and those that, you know, may require, you know, special handling as well. So with fast invoices that are in, you know, this process, what we're able to do is we're addressing late payment penalties, we're strengthening our supplier relationships, and then we're providing buyers with a greater linkage when it's time to negotiate with our key suppliers. And what I really love is we're adding additional controls to the whole closing process as we showed on the previous slide. We're not chasing accruals, we're not chasing paper. We know that our fiscal close is going to be very, very true and very accurate. And of course, we're cutting down on reconciliations, and you know, again, we've got an accurate close. And we're allowing the ability to take our early payment discounts, which is great because we're bringing more cash into the company. And at the end of the day, what we have is improved cycle cost and reduced cost overall for the accounts payable process. So what's our impact on metrics? And we know that days to process an invoice with a fully automated process are about 3.9 days, and there's a decrease in processing times after implementing invoice approval with workflow, and that's about 70%. And with the research, again, from Ardent Partners, the time to process a single invoice can be under, you know, 5 days. With workflow automation, it's about 46%, 10 to 15 days, 28%, 15 to 30 days, 14%, and again, if we were more in, you know, a manual process, 6% that are almost like totally manual can take almost 30 days to process an invoice. And you can guess why, because they're chasing paper and dealing with all those pain points and all those issues that we talked about without having automated workflow. They're waiting for somebody to find an invoice on their desk, to sign off on it, and to wait for the next level on the approval chain to sign off on it manually. Okay, so I'll hand it off to my colleague, and we'll talk about the roadmap for implementation.
Thank you, Chris. And Chris has highlighted many aspects of policy-related internal compliance and how workflow automation makes it easy, error-free, and strengthens the internal audit trail. But important part is that we set a definite roadmap to figure out how delegation of authority policy and workflow planning can be done. And we have identified quick 5 steps for you here. Step 1 being develop policy. Figure out what is the main policy that your company plans to execute. And the second part is a sub-part of the first step itself. In fact, the approval policy related to the workflow management system. The third step is developing a signature approval level metric for expenditures and company commitments. Basically, who will report to what, who has what level of access and authority. Step 4 is link approval matrix to job level with the employee master. And fifth is implementing that policy which we have defined in the last 4 steps through an automated workflow tool and defining the processes around same. To look at it from a case study point of view, WorldCom was one of the catalysts for the Sarbanes-Oxley Act of 2002. Scott, the former chief financial officer, had devised a strategy that improperly accounted for $3.85 billion of expenses. That's a huge amount of money. So how do you fix a broken company with no corporate governance? You have to develop a corporate policy and approval BOD. You have to implement the delegation of approval policies with automated workflow, link the email with the approvals and the approval levels directly to the employee master. And then as a final step, automation linkage to the DOA policy with no tolerance for violations. So in short, this is very similar to the roadmap consisting of the 5 steps that we have identified before. So now that we have given you a 5-step approach to strengthening the delegation of authority policy with workflow automation, I want to focus this discussion now particularly on step 5, which is about implementing the workflow management using technology. This step itself is a complex step to execute, and companies are unable to define clear steps to choose and implement a tool which works for them. Everyone knows that that specialized procure-to-pay solution, including invoice automation and approval workflow management, is the final step. But they don't know why. They don't know what are the benefits they should look for in such tools and technology, and what characteristics to look for in the software. I will throw more light on this aspect now. Many companies use invoice approval workflows via ERP, which has the capability to handle basic workflows. As ERP is the central of all businesses, this trend is actually very novel. Even usage of generic workflow management tools integrated with the ERP is a common trend because ERPs cannot cater to complex work scenarios and lack the agility to accommodate complex business hierarchies. In ERP, even if the customization is possible, it is a long time-taking process due to the architecture of ERP technology, which is more robust than agile. Even integration of generic workflow tools to ERP to manage workflow and agility is like seeing only one part of the problem. Real value comes when you look at the complete problem you're trying to solve, maybe from a vantage point, if it helps, and look at the complete solution but not part of the solution. Generic workflow tools solves only part of a problem. The real problem is broken, disconnected, manual processes and lack of visibility of the entire work stream. Several generic tools integrating to an ERP causes the problem of data silos. The real problem is the lack of centralized connected view of spend data and approval workflows for audit. ERPs and generic tools are not able to address this problem and result in longer approval cycles, which affect the company's cash flow in the larger context. So, is a specialized comprehensive solution built on a central data hub? What is the answer to that question? As per Gartner's postmodern ERP strategy for leaders, specialized solutions built over ERP bring a good balance of robustness and agile. Critical strategic processes can reside in ERP, while operational or transactional processes like PO processing, invoice processing, etc., can be managed by specialized solutions designed to specifically manage those. So to answer the question, yes, specialized solutions like P2P add additional value by making business process more agile, helping in incorporating complex business workflow, and by creating a consolidated ecosystem of centralized data by removing multiple tools with one comprehensive solution integrated with ERP. And yes, they are easy to implement and they can easily integrate with all the ERPs. Note that all the avenues where these systems are adding value are operational in nature and change very quickly based on external changes in business. So what companies need is a technology which can adapt faster to keep pace with the business operations. Now that we have established the need and the importance of specialized P2P solutions integrated with the ERP, it's important to establish what kind of vendor actually matches your specific requirement. While this is a task which is very specific to the nature of the business of the company, there is a broad checklist which managers can follow to see if a solution qualifies broadly to solve their workflow automation related problem. The scope of features to look at in a solution can expand based on how big the challenge the company is looking to solve by implementing the technology. But I will present to you a quick handy list of characteristics which you can use, like ease of use of the interface of the technology, how easily the technology can be implemented within your company, the ease of integration of the new software with the existing systems and the data warehouses that you have, ability of the system to manage workflow approval complexity, whether the system is able to scale as fast as your business grows. Is the software actually giving you any ROI in the short-term and the long-term project timelines, and whether it gives and centralizes control to the procure to invoice to pay processes. So this is a very broad level list, but it is a good reference list that anybody can look at to decide if a vendor at least qualifies for any kind of implementation. In the process of implementation and project scope planning, this will become more detailed for any company. An important thing to note is that the complexity of workflow automation increases with the increase in the number of parameters in the workflow. Just to give an example of few parameters so that you can identify with it are legal requirements, business rules, cost centers, category centers, invoice type, and amount. When looking specifically for workflow automation requirements, managers should ensure that all possible parameters relevant to the company are covered. Zycus is a leading global provider of complete source-to-pay suite of procurement performance solutions. Our comprehensive product portfolio includes applications for both the strategic and the operational aspect of procurement. You can think of us as a guided procurement system, like a GPS, to ensure best buying decisions every time. To give you a quick snapshot of our main features in our P2P solution, we have guided buying for catalog and non-catalog items, PO bag invoice and contract bag invoice payment, easy to execute dynamic workflow to manage complex approval scenarios, invoice send and receive feature and payment tracking on the supplier side portal, superior detailed actionable analytics support, source-to-pay integration to take care of the sourcing side, and integration to all ERPs and relevant systems. Moving on, Zycus holds one-of-a-kind of annual event for procurement and finance professionals working in procurement and sourcing fields called Horizon. This year we have the 7th edition of Horizon after 6 years of successful events in the United States of America. It is the great place to discover the upcoming business trends, best practices, to learn from the industry pathfinders and trendsetters, and to network with like-minded peers. You can register now for the conference and avail a $100 discount on the actual conference cost. This is all from my side. Over to you, Laura.
Okay, thank you. We are now going to run our Q&A portion. Just for a reminder to please ask your questions in the chat box, and we will get to them shortly. Our first question here is, Chris, who usually owns the Delegation of Authority policy, and why is it critical to link the policy to an automated workflow process?
Okay, sure. Yeah, the policy is usually owned by the corporate controller, and you know, certainly in some companies the CFO owns it as well. But, just as we talked about in establishing the policy, it usually has board of director approvals, and the controller also has responsibility to establish a series of internal controls for the Delegation of Authority policy. And having a policy without, some sort of automated process to go with it is sometimes is very, very difficult, to ensure that things have been implemented, properly. And by, some of the automation processes that, we talked about in today's webinar, we're showing you how to basically take up a policy and, building a matrix around it, as we look at one of the little process flows, build a policy, set up the approval, high-level process flow, then establish the matrix by job level, tie that to a solution, and then, you basically have an approval process for really all company commitments, which is basically established, by invoice approvals, and you can even build it for PO approvals. Many companies have used a similar process for T&E as well. So they use a process not only for, accounts payable, and of course P2P, but also T&E approvals, and it works great. And, the key is to make sure that exceptions are properly flagged, and, the caution that I always, mention is not to build in so many exceptions so that, it stops the approval process dead in their tracks. So you want to be, careful that, you're very reasonable about, what you're stopping as an exception. So, yeah, that's a great question.
Thank you. We have a question from Cindy, and she wants to know, what is the target volume for number of invoices that would make sense for AP automation?
Yeah, that's a good question. I'd like to defer to my colleague, from the Zycus to answer that. Is that something you can help answer?
Yes, Chris, definitely. From my personal experience, more number of invoices means better ROI from invoice automation system. So in case you are looking at a solution, so there is no lower cap that you must have these number of invoices to implement an automation tool, because automation tool is also for reducing paper, for reducing errors, for reducing manual work. But in terms of return of investment, more the volume, more the return of investment you will see in the shorter term and in the longer term. So just to put a number to the question, I would say real efficiency in terms of cost saving on processing will come if you are looking at an annual number of 1 lakh invoices. Does that answer the question?
Sure. We have a follow-up. How does this work in a non-PO environment?
Okay, so Laura, to answer this particular question, in a non-PO environment, definitely, because there is no PO to validate an invoice against. So what a contract is used to validate invoice in that case. And in that case, all the checks, all the matchings, all the exceptional handling happen in that flow. So the only difference between a PO-backed invoice and a non-PO-backed invoice is the flow in the process and the series of validation checks and the approval checks to pass that invoice to a payment stage.
Great, and we have a question from Max. What dashboard type metrics are typically available with these automated workflows to track where in a workflow invoice volumes are?
So dashboard-wise, Chris, do you want to add something before I go?
Nope. Go right ahead. You can tell them about the dashboards that Zycus offers. That'd be great.
Definitely. So we offer a lot of dashboard and analytics, and it is very customized, and we can make it as per the company's need. But at a very broad overview level, you will be able to see your spend flow. You will be able to see where the money is being spent on what in the procurement of which item, and any kind of actionable insight that you can take on it, and any kind of strategic savings that you can get out of it to get more dollars in your business is what comes up. And these these reports are something you can look at, you can download, you can import and export. And the best part is these kind of dashboards and functionalities work in a very, very integrated system. So if your system is in isolation, if there is just an invoice system which is not talking to a PO system and it is not talking to a contract management system, the dashboard data detailing will be as low, and it won't be of that much of usage as it would be if all the systems are connected, all the data is connected, and there is one single source of truth. So more or less the dashboard gives you spend flow data. It shows you strategic saving opportunities.
Okay, so we're saying that the dashboard can be customized based on your client's requirements, right?
So I would say that every client has a different need. They want to look at different kind of numbers, though the trend points to a generic dashboard also basis, which we have provided a dashboard which will cater to the basic needs of an organization. But if a particular organization points out during implementation that this is the kind of specific graphs and charts they need to look at which would make sense for them, it is something we can execute and plan during the implementation phase.
Okay, that sounds great.
Great. We have another question here. If invoices are scanned in so approvers may see them, is this done by the automation company or the AP department?
So the automation company, basically it is a tool. It is not a company. It is not a service which Zycus or any P2P software provides. It is a tool which integrates with your ERP and helps you receive and send invoice, process invoice. So the way you input the invoice into the system may be various. You may even use invoices. In fact, traditionally, paper-based invoices are circulated. You get invoices over the emails or scan-based invoices, and everything is done at the buyer side in the company premises by the software. So how does that work? There is no separate body or a company working to provide the service of that, but basically it is a supplier logging onto a portal to share an invoice or to upload a scan or to fill in a web form. The ways of input of invoice are varied, and we support all kind of formats, but that is the one-stop solution of receiving the invoices. And once it is received, it goes into the system and the invoice processing magic starts. So that is how it works.
Great, thank you. We have another question here. Why is it a best practice to use the employee master file for approval levels that are established in the Delegation of Authority policy?
Yeah, it's a best practice because you're kind of, putting automation for the Delegation of Authority at the front end. And, usually, if you say that a manager, is level, 105 or something in the employee master, that's kind of a code for, that job, that particular job level. So we're saying that, all level 105s, within a company have authority for, say, $100,000, of spend. And so whenever a 105 becomes a 110, their levels, go up to, maybe 150,000 or something like that. And so it makes things a little bit easier, and what it does is it's kind of, adding a control, and it's linking things to kind of a system of record, and as that employee, again, moves around the company, or moves to a different department, you don't have to do anything out of the ordinary or anything manually to change their job level because it's built right in. So tying, that matrix that we had an example of to the employee master is a great idea. So what you have to do, though, is, of course, work with human resources and tie, your delegation of authority policy, to that employee master. And, so it kind of goes without saying, building the employee master or building the delegation of authority policy, if you're starting one, or if you're, enhancing what you already have and you're looking to take some of these steps, we've talked about, it does take a fair bit of work, and, you should have a sponsor, and certainly it does, certainly help by considering all the automation steps that we've talked about. And, wherever you can, do some of the best practices and implement some of the things we're recommending, it does help out in the long run. And at the end of the day, you've got a great audit trail.
Thank you. We have a question here. When invoices are forwarded to approvers, are they sent in batches or one by one?
I've seen them work both ways. I've seen them work in batches, and I've also seen them work one by one. And, in a workflow, situation, sometimes it's easier for the approver to see a single document. And, it depends on how, the solution works. But, basically, you can send them in batches. Is that true with the solution that Zycus has?
So, Chris, I would say during the implementation stage, the integration is either file-based or it is XML format-based. So, based on the type of integration, the exchange of data is possible, and based on the kind of exchange of data between two systems, the batch or the real-time mode works. So it entirely depends on how a company is implementing a particular solution. So both ways, as you said, are possible.
Okay,
great.
Good.
We have a question here. Can an automated workflow process help my company with the fiscal closing process? If so, how?
Yeah, that's a good question, and again, we talked about that a little bit, during the webinar, but just to kind of talk about in a little bit of detail, before we had some great solutions like workflow and e-invoicing, and we were again chasing manual invoices, and the biggest challenges were, ensuring that the invoices were sent to accounts payable. Certainly in a large company, they would go to, maybe the buyer, maybe the business process owner, and at the end of the month, we'd in accounts payable, we'd reach out to pretty much everyone in the entire company and say, here's the cutoff time, for ensuring all your invoices are submitted to accounts payable. So, in other words, clean out your desk and make sure that you're emailing or bringing your invoices, and then there'd always be some that were out of the office or whatever, and they'd bring them, and sometimes they'd be approved, unapproved, whatever. And then you'd run the risk of not properly recognizing liabilities at the end of the month. And you'd have to do some, sometimes some post-close or adjustments, and it would just, delay the close a little bit. And, some, again, best practices for closing the books, if you will, from a corporate consolidation perspective can be as quick as, sometimes 3 to 4 days. And if you're waiting for accounts payable to close their processes, they can certainly be a kind of a thorn in the fiscal closing process and kind of, impacting that final mile of producing the company's financial reports. And I really, love the whole concept of approval, linking approval to automation, because what it does is it's ensuring that those accruals are going to be submitted on time, and it's going to, certainly alleviate the risk of having a late close, and it's going to help accounts payable get all their data in a timely manner, and it makes the life of an accounts payable professional a lot easier. So, yeah, great question, and certainly, enforces the value of the automation approval process.
Thank you. It looks like that is our final question. But before we close out, I do have a couple housekeeping notes. Many of you have asked about the on-demand version of this webinar. Everyone will receive an email within 2 business days with the recording of today's webinar and a handout, which is the PDF of today's presentation. So look for that in your inbox within the next 2 business days. Also, if you could please fill out the short evaluation form that will appear once you close out of the webinar window so that we can better serve your needs in future webinars, that would be greatly appreciated. Thank you again to both of our speakers, and thank you to all of our attendees for taking time out of your busy day to join us. This webinar was brought to you by the AP and P2P Network and sponsored by Zycus. Thank you all and have a great day.